I put $25,000 on my credit card. My co-founder borrowed money from his grandfather and then put $10,000 on his credit card. And we both went in and started.
Henry Schuck, founder and CEO of ZoomInfo, built a leading go-to-market intelligence platform from the ground up, now serving over 30,000 companies. His journey from startup founder to industry leader drives ZoomInfo's mission.
Back in the day, this was 2007. There was no LinkedIn. You didn't really know who worked in the technology departments of companies. The idea was, can you democratize that across all of these innovative startups and new companies that have better products? First year, we were a $300,000 business, then $800,000, then $1.7 million, $2.5 million, $5.5 million, $15 million, $35 million. And then we were kind of off to the races from there.
What has really stood out for you in the best PMs and product leaders you've worked with?
So they come into a situation, they have a point of view, they're willing to go out there and have that point of view challenged and molded and changed into the right thing for ZoomInfo, and they're essentially a conduit to the best product decisions at the company.
You had a very narrow niche to begin with, medium-sized IT companies. Where did you build the conviction that we're going to target just this segment of the market?
The trick about building content, period, whether you're building content for salespeople or you're building content on a newsletter or a podcast, is...
So today I'm super excited about today's episode of the podcast. We have our first public company CEO, but hopefully not the last, Henry Schuck, the CEO of ZoomInfo, also the founder. He has been helming the company for 17 plus years. Henry, thank you so much for coming on.
Thank you for having me. Excited to hit these questions with you.
So you're what I would say is one of our true success stories. You're the American dream personified. You're the founder CEO who started a big public company. So I want more people to hear that story. You and your co-founder actually put $25K on your credit cards, crazily enough, to start the company. So tell us more about that story and how did you guys find product market fit in the early days?
Sure. I think about this as JP Morgan Chase's worst non-equity investment in a company, because that $25,000 was a debt investment that I got to pay off, pretty soon thereafter, but would have been a really valuable equity stake in the business. And I don't know why Chase gave me a $25,000 limit on my credit card when I was in law school, but they did. And so when we started the business, I put $25,000 on my credit card. My co-founder borrowed money from his grandfather and then put $10,000 on his credit card. And we both went in and started building this business. We had the benefit of having worked at a similar company when we were in college. I got to see that business at $300,000 in revenue when I got there, and about 5 years later turn into a $5 million revenue business. But it was a $5 million revenue business with $4.7 million of profit because we just weren't investing back into the business. And I had an opportunity to be CEO of that business, but couldn't see what that actually meant. I asked my boss, who's the founder and a great visionary, what does me being CEO at this company mean? Does it mean I can build a sales team and build a marketing team, build out the product? And he was like, no, I still make all of the decisions and do everything, but you'll be the CEO in name. And I was like, no, I'm going to go to law school. So I went to law school. 1 year in, we started the company, and we spent kind of half of our days working on the product and then half of the day figuring out who the right targets for that product were going to be. And so we built up the product kind of over the first 6 months, which meant, back in the day, this was 2007. There was no LinkedIn. There was no you didn't really know who worked in the technology departments of companies. And we were focused originally on the IT departments of medium-sized businesses.
Today's episode is brought to you by June, the customer analytics for product-focused teams. Are you not sure what users do in your SaaS? What features they use the most? Do you wish that you could know what each company does and use this information to generate incremental lift in revenue? June is the product analytics platform you need.
It generates profiles for each of your customers that get you closer to your most important ones. It also connects your product data to your CRM so you can get a full view of your customers in one place, so you can engage with the right message at the right time. What makes June different is that it's made for B2B SaaS. It comes with account-level analyses, fast ways to look up your customers, and CRM integrations to share this information between your product, your success, and sales teams. And one line of code is all you need, and you're good to go. Sign up for a free trial today at june.so/Akash. That's june.so/AAKASH. You get a discount if you use my link. This episode is brought to you by Sprig. What if product teams knew exactly what to build to reach their goals? From increasing conversion to boosting engagement, these challenges require a deep understanding of your users, something we can't get from product analytics alone. Meet Sprig, a product experience platform that generates AI-powered opportunities to continuously improve your product at scale. First, Sprig captures your product experience in real time through heat maps, replays, surveys, and feedback studies. Then, Sprig's industry-leading AI instantly analyzes all of your product experience data to generate real-time insights. Sprig AI goes even further with actionable product recommendations to drive revenue, retention, and user satisfaction. Join product teams at Figma and Notion by uncovering AI-powered product opportunities at scale. Visit sprig.com/product-growth-podcast to book a demo and get a $75 gift card.
You couldn't just go online and figure out who the CIO and their direct reports were. And so everybody who had spent 20 years selling some kind of IT or storage product to the enterprise had this insane advantage over everybody else because they knew the decision makers. They had seen them at conferences for the last 20 years. Maybe they were members at their golf or country club, or they went to college with them. And so if you had a real Rolodex, which is like a flip, like a business card flippy thing, you should Google it. Maybe most people don't know what that is today. But if you had this great Rolodex, you were way ahead. And so the idea was, can you democratize that across all of these innovative startups and new companies that have better products than what these 20-year salespeople were selling their friends at country clubs? And can we make it easier for those companies to compete? And the only way to do that really was to unlock that data that lived across thousands and thousands of Rolodexes into a platform that people could leverage to get in front of their buyers. And so we started putting this platform together, starting with that data. We'd call into companies. We'd spend most of our days on the phones with operators and assistants trying to figure out who was who in an IT department, put that data asset together, and then took it out to market. About 6 months later, we sold our first deal 6 months after we founded the business to a publicly traded IT staffing and recruiting business. It was a $14,500 deal. It was $8,500 for access to the platform. And the first thing we realized in the sales process was the number one objection we were going to get was, hey, it's great for these companies that you have, but my sellers are also focused on all of these companies, and that you have great mid-market coverage, but you don't have Fortune 1000 coverage. So like, I can't just buy this for a small portion of my team. I need it for everything. So we said, okay, no problem. It's $8,500 for the access to the platform as it exists. But for $6,000, we'll go build custom profiles for you across the next, 1,000 accounts you want us to build. And so it was a mix of kind of like a services contract and an annual subscription business contract. But we knew we'd be building, we were going to build those next 6,000 companies or whatever it was anyways. And we'd be able to share that with the rest of our customer base as the customer base grew. And we did a number of those contracts in the early days. They were kind of like, muscling our way to product market fit. You had like some product market fit, but not complete. And where we didn't have complete product market fit, we'd get our customer to fund the building of the profiles and the data that they needed to go all the way across their total addressable market. So the first year, we were a $300,000 business, then $800,000, then $1.7 million, $2.5 million, $5.5 million, $15 million, $35 million. And then we were kind of off to the races from there.
Wow. And I think one of the really cool things about that is how you had a very narrow niche to begin with, medium-sized IT companies. Where did you build the conviction that we're going to target just this segment of the market?
Well, some of it was misinformed. So the company that we had worked at previously was focused on the largest businesses in the world. So it was doing kind of the Fortune 100, Fortune 1000. And we were like, look, we imagine them as like this huge, gigantic competitor in the marketplace. And so we said, like, we don't want to compete against them, but they're doing nothing in this mid-market space. And obviously, there are way more companies in the mid-market, and companies want data on that next set of businesses that they're not getting from this huge competitor out there in the market. So let's just focus here because it'll be wide open space for us. And there won't be any other competitors there. And if we come up against the company that was using the previous, it was called iProfile. We acquired it in 2015. But if there was a company that was using iProfile, we could show up and say, yeah, absolutely, keep using iProfile, but you need us for the mid-market. And if there was a company that wasn't using iProfile, we could say, buy us for the mid-market, and then pay us and we'll build you the Fortune 1000. And so that was the thinking. Also, being that specific, it's probably a lot like, Akash, you're building like content for product managers at software companies. Like it's a really small niche. And like the trick about building content, period, whether you're building content for salespeople or you're building content on a newsletter or a podcast, is while you think that having a really broad audience is the right way to build like the biggest, best business. The truth of it is, once the audience gets so big, it's hard to directly speak to anybody with enough specificity that they connect with you, they connect to your company, they connect to your content. And so when we were talking to technology companies that we knew sold to IT decision makers, we knew that they sold either to enterprise or mid-market. You didn't need to look for mid-market because if you sold to enterprise, you also sold to mid-market. They have very similar needs. And so we got really tight on product market fit. The only people I was talking to were IT staffing organizations, cybersecurity companies, networking and infrastructure businesses. You could read a profile. You could read a one page in 1 minute. You could look at somebody's website and go like, yep, that's a fit. Or nope, that's not a fit. So the early days, I would print off like thousands of pages of Hoover's, which is a Dun & Bradstreet product. And in 2007, it was like the product. And they editorialize the companies. And so they'd do something like quippy. They'd be like, this network infrastructure company does more than just check the networks. It does blah for CIOs too. And I'd have 1,000 of these and I'd just look through them and I'd go, yep, that's a fit, that's not a fit. That's a fit, that's not a fit. That's a fit, that's not a fit. And then we built up all of our marketing and sales efforts across the ones that were fits. They sold to IT. They were based in the US. I could find a head of sales or a head of marketing, and then I could do direct outreach to them.
That's really cool. There was kind of like this integrated product and go-to-market motion. And interestingly, with the product, you had that service component you mentioned. So how did that evolve over time? Did you eventually reduce the amount of the service component of those contracts, and how did that play out?
Yeah, I mean, it took a while because we kept wanting to build new data assets. And I remember I was sitting once, we were hiring our first CFO, and I was sitting in an interview with that CFO, and I was telling him how we had just built a data asset for marketing decision makers. We had 1,200 companies that we had built sort of deep profiles on. And I was like, it's just not enough. These 1,200 companies, they're not enough, because every time I show up at a customer, they're like, yeah, it's nice that you have these 1,200 companies. Maybe it was 12,000 companies, but you don't have these and you don't have those and you don't have these. And so we were trying to like muscle our way from a service perspective on those as well. And he was super insightful. He went, 1,200 companies is not a lot if you have like 100 media companies and 100 financial services companies and 100 tech companies. Like, why don't you just verticalize these things? Because if you had 1,200 media companies, then it's like, it goes back to the niche point, right? If you had 1,200 media companies and the marketing directors at those media companies, then you could go find the people who sell to media company marketers and sell them the platform while you go to the next vertical and the next vertical and the next vertical. And we're just like, okay, yeah, that's the way you do it. You actually make the niche tighter. So instead of saying, hey, we're going to find you all of the chief marketing officer and the chief marketing officer's departments across 1,200 Fortune and mid-market companies, you could instead say, we're going to give you really deep data on the marketing departments of media companies. There are 1,200 of those, and there are niche providers who sell specifically to media companies that we could go market and sell the product to. And so then we just got smarter about how we invested behind a data asset and made it more specific, and then targeted a more specific buyer while we continue to grow into other verticals and other segments.
Very cool. And what was the structure of the data asset and how did that evolve over time? Did you always start with like org chart, contact information, or did you eventually arrive there?
Yeah, we always started with org chart and contact information. Org charts were just like a really great way to visualize the content. And so the content was like decision maker data, email, phone number, title, mobile phone number. And then who they reported to had to go into the org chart. And it was a really easy way to see what we were selling. And so in the early days, the early marketing collateral or email marketing collateral would include like a link to two org charts that we had built, that we had perfected. And we'd say like, go look at these two things. And if you like them, there are thousands of additional ones that your sales teams could use. So it ended up being a great part of the product and a really great marketing asset as well. So it started with contact data, org chart data, and then that people data. And then we were mixing in technographic data, what technologies the company was using. And then what we called at the time, trigger data. And so like when a new person was hired, when they just implemented a new technology. But it was all of that in the early days was pretty bespoke. There wasn't like a scaled workflow way to take advantage of a people move or a new technographic showing up at a company. It was like you would read it in a newsletter and then you would go take action on it. And then over time, we started building the components to make that usable through an automated process.
So you mentioned that you were literally calling people. You were doing sales outbound, which was actually the customer profile you were selling to too. So that was probably a really virtuous feedback loop. Was that always your main go-to-market motion? How did your go-to-market motions evolve over time?
So originally, the go-to-market motion was all outbound. And so I was building email marketing campaigns. Basically, once I went through that list of thousands of companies that could be fits or not fits, I had the list that was fits and figure out who the heads of sales and marketing were at those companies. I would build like an email list, a really targeted email list, really targeted content. I'd do email outreach, and then basically I'd respond to what came in. And at the time, it was like I could send 100 emails and I'd get 1 or 2 demos every time I sent 100 emails. And so it was a really like predictable way to build pipe. And so I would be doing that all day long. And then I would be doing the demos, or like in the mornings, and in the afternoons, I would be doing the demos with the companies that had agreed to do a demo with us. And then over time, that evolved to all the stuff you would expect it to evolve to. And you can ask me questions specifically on them, but we have a pretty robust ABM motion today where we're going specifically after upmarket enterprise accounts and using our ABM platform to target them, get ads in front of them, coordinate that with the sales play. There's a pretty big, what we call at ZoomInfo, go-to-market plays organization, who's basically organizing plays that go out based on users, former users of our product who are no longer at their companies, or public companies who say that they're expanding sales capacity in their organizations, or companies that have posted more open sales jobs in the last 12 months than in the previous 24, or any number of these like unique plays that are being run both from a marketing organization perspective and a coordinated motion with sales development reps to call behind those. And so there's go-to-market plays that are happening. There's content that's being created. We have these directory pages online where, if you looked up Henry Schuck at ZoomInfo, my profile would come up. You could sign up for a free trial. A lot of those are converting into new business, or at a minimum, telling people who we are and having them come to the homepage to sign up for a free trial. There's a pretty big SEM organization. And so we're buying ads on Google and Bing and a number of other places where we're, capturing demand that's out there. And so we're generating demand in a number of places. We're capturing demand in a number of additional places. We're creating demand through SEO as well. So it's a pretty, there's nothing, I don't want to say in go-to-market, there tends not to be anything unique. What is unique in go-to-market is the level of precision with which you execute against anything, and then the creativity that you're able to unlock in a scaled way. So like, people talk a lot today about champion moves. So if I show up at a customer and I say, hey, we can track your champions from company to company. So, someone who bought your product at this one company and then left, we can track that for you, automate the campaign behind them, have you in front of them. People love that campaign, but great salespeople have been running that campaign for the last 2 decades. And the unlock is, can I do it at scale and execute with precision on that over and over and over and over again? I think that's a unique thing that ZoomInfo does well, is that it uses systems and processes to really execute against an ABM campaign, a champion moves campaign, in a really tight way.
So obviously, as a public company, you have to execute against virtually every GTM motion out there. But when you started, you were just at that kind of like not even ABM, but like email list based outbound. How did you kind of sequence those motions going from one to like all?
So at some point, I broke the email marketing machine, largely because I got to this place where I was like, well, look, it's just like, if you put more emails in, spits out more demos. So just keep putting more emails in. And then what we realized was, it's a really great way to get blocked by spam filters. It's a really great way to hurt your corporate domain. And it doesn't really work. You can't just throw in the next 1,000 emails in the thing and expect you're going to get one email out without content that's personalized and the right buyer profile and the right messaging. And so when that started to break, which was probably around, we bootstrapped this business for 7 years. We got to about a $30 million run rate before we took outside money. And I would say like right around $35 million, right when your first institutional investor comes in, the system started to shake. And you went, okay, what are we going to do about that? Like, how are we going to fix that? So we started expanding the channels. I would say that's when we started taking SEM much more seriously, SEO much more seriously. But then what this actually led to was an acquisition strategy, because all of the things that we were doing were actually generating more demand than we were able to actually service. And what I mean by that is, about a third of the leads that we were generating in 2018 were leads we couldn't action because they were asking for data that we didn't have. And so at the time we were covering IT decision makers, marketing decision makers, HR decision makers, but you get somebody who came in who said like a third of the leads we were generating wanted supply chain decision makers, CFO and finance decision makers, legal decision makers. And so while we were spending all this money to generate the demand, we actually weren't able to service the demand we were generating. When we acquired ZoomInfo in 2019, because the company I founded was called DiscoverOrg, when we acquired ZoomInfo in 2019, one of the one of the synergies we knew we were going to get is that all of a sudden that third of leads that we weren't able to service before would be immediately serviceable. Because what ZoomInfo did was significantly increase the breadth of data that we had. And so it increased the number of companies, it significantly increased the number of companies and the number of professionals at those companies. And so we would have this immediate lift in our ability to close more revenue on marketing activities that we were already generating. That's one interesting thing that came from the demand gen engine starting to break. The other one was we became maniacal about making sure that we got every dollar out of every lead we generated. And so when a lead came through, we had this like long debate internally in sales where we said, hey, look, a great lead comes through. We know it's a great lead, but the way our routing works is that we round robin it to the next person. And so we have all these new sales reps, doesn't matter. If a great lead comes in, goes to the new sales rep. Next lead goes to the next, goes to the next, goes to the next until everybody gets their lead. And then we go back through the whole cycle. And then we said, but we know that when that great lead comes in, that if we send it to our best sales rep, that we'll get more money out of that lead. And we have a much higher chance of closing that lead if we send it to our best salespeople. And then there was this big debate internally that was like, well, that just creates this self-fulfilling prophecy. Your best reps will always be your best reps because you're always giving them the best leads. And so you have to round robin this thing so you have a real clear view of who is the best. Because you can't just go like, hey, that guy's the best, but I sent him all the best leads. He's not really the best. What about this guy who got all the crappy leads and still like was, in the middle of the pack? So what we ended up building was this really sophisticated router that did in fact route the best leads to the best people, but then it did a 4-month look back and it said, we broke it down by tiers, tier 1, 2, 3, and 4. Tier 1 were our best leads, 2, 3, and 4 were after that. If you were in tier 1 and you underperformed the rest of your tier 1 colleagues who also got the best leads by 20%, the following month you moved to tier 2. And if you were in tier 2 and you outperformed your colleagues in tier 2 by 20%, you moved up to tier 1. And so it was like, what do they call it? What's it called in Europe? Champion League soccer, or where you like qualify for the next tier and then you qualify for the next tier and you can move up and down at any time. It was like that. And so now all of a sudden we were sending leads out to our best people, but if they weren't performing commensurate with their other counterparts, they would move down tiers. And so look, if your lead machine is breaking, you better make sure you're getting as much out of everything you're generating as possible. And then two of the ways we did that was one, making sure that every lead that came in was maximized. And then 2, the acquisition of ZoomInfo gave us an opportunity to act on every lead that came through instead of just 2/3 of the leads that came through.
There were so many insights in there, but the 2 I would really narrow in on for people listening. One is like starting with a really targeted niche, really then only once you got to 30 million in revenue, expanding and relying on one channel to hit that niche. So many people want to do like 5 niches, 5 channels, but up until 30 million, you guys were one niche, one channel. And I think there's a lot of wisdom there and a lot of people could learn from that. It's like really dominate one, then you can layer everything else in. So you referred to this briefly that, you rebranded to ZoomInfo. And I want to double click on that rebrand. Obviously, it's worked out really well now. Everybody knows ZoomInfo. But at the time, anytime you make a big move like that, there are, short-term repercussions or things that you learn, and you might say, we might have done better. What were the areas you could have done better on the rebrand, and what did you learn from that?
Yeah, so interestingly, once we made this acquisition, anytime you're doing an acquisition, these were pretty equal-sized companies. Like the DiscoverOrg folks felt like they had conquested something. And if you're doing acquisitions right, you're really evaluating both organizations at the time of acquisition and then making decisions on, okay, this organization does this, this, and this better than my organization, or, my organization. And so when I bring the two companies together, the this, and this are actually going to take over the this, and this at my company. And so we did that with technology and marketing. ZoomInfo had a more efficient marketing organization, and it had a better technology organization. And so when the companies came together, the CTO of ZoomInfo became the CTO of the combined entity. The CMO of ZoomInfo became the CMO of the combined entity. And it created this weird cultural thing where like the folks at DiscoverOrg were like disappointed in like not being able to just like run over the existing team. And then as the CEO, it also became one, culturally noisy. And then two, it also became noisy around the decision. So people knew I was in the process of making decisions about how to put the two organizations together. And I remember this specifically on marketing. Every day I would come into the office and the two marketing leaders would like tell me some other noise or variance in the way that I was looking at the numbers. Well, you're not taking consideration this, or you're not taking into consideration that. Well, they had a bigger budget. Well, they had this, they had that. And so it took me like 2 weeks to just go, give me all of it. Tell me all of the things that make it unfair the way I'm looking at it from both sides. And I'm going to normalize for all of it. And then I'm going to show you the numbers and I'm going to make a decision on it. And so the first thing we did was like bringing the orgs together before the rebrand and making sure that like the teams understood who was going to run what and trying to have an objective basis to make those decisions. Then I moved to Boston from Vancouver, Washington, where the DiscoverOrg headquarters were. So I was spending a month in Boston, a month in Vancouver, a month in Boston, a month in Vancouver. And so people realized like there wasn't an org that I was more, friendly towards. I was making business decisions here. And then on the rebrand, what we did was as part of the diligence to acquire ZoomInfo, we had one of the big consulting companies do a brand equity study. And in the brand equity study, you saw that that DiscoverOrg had deeper brand connectivity, deeper brand equity, but ZoomInfo had way more brand awareness, like 4x the brand awareness of DiscoverOrg. And then you said, look, we brought these two companies together to really explode the total addressable market. And so having an asset that has 4 times the brand awareness as the DiscoverOrg asset, which was still kind of niche, is a much more valuable asset for the business. And so I came to terms with that. I actually wrote a memo to the company that said, like, here's what we're doing. Here's why we're doing it. The name's going to change from DiscoverOrg to ZoomInfo. The board was actually more hesitant than I anticipated. That I thought they were going to be like, oh, wow, okay, Henry's saying get rid of the name of the company that he founded. We're just going to go with what Henry's decision is on this. And instead they were like, well, I don't know. There's a lot of brand equity with DiscoverOrg. For the first year, we had, it was ZoomInfo powered by DiscoverOrg. So on all of our branding, it always said ZoomInfo powered by DiscoverOrg. And so we kept both brands for a year, and then we slowly got rid of the powered by DiscoverOrg piece. Lessons. What did we learn? I think first thing I learned was how to best partner with brand agencies. In general, I hate agencies. Like and oftentimes when people show up at ZoomInfo and they tell me like, hey, I hired this agency to do this thing. Like usually what I hear is like, I don't really know how to do my job, but these people know how to do my job. So I'm going to have them do my job for me. But what I've appreciated over time, what I appreciated during that time is we needed to come up with a new logo, a new brand identity. We used a big brand agency to help us do it. What I appreciated at the time was they do a good job of giving you some material that you can start to iterate on to make your own. And what I came into these conversations assuming was you're paying them a whole bunch of money. So they better be coming up with like really great ending ideas, like complete ideas. When in reality, they're coming up with like good ideas that you can make your own. And if you have come at it with that lens, it's much more collaborative, and you can sort of build great things by leasing really creative minds for some period of time. And so we came up with a new brand identity, launched that at the end of 2019 with a new platform that we brought together. We brought the DiscoverOrg and ZoomInfo platforms together and launched that. And all in all, like a pretty good, pretty seamless branding change. But the Powered by DiscoverOrg got a lot of people much more comfortable. And by a year later, they didn't care anymore.
Got it. So right after you did this huge rebrand, the next year you went on your next challenge, which is the IPO. It was after 13 years as a private company CEO. What surprised you most in the next 4 years with life as a public company CEO?
Maybe well, first, you're learning things. Unless you've IPO'd before, there's just a whole bunch of inside baseball that you don't know. Like IPO allocations and who the investors are and what a real roadshow is, what a non-deal roadshow is, what lead left is, it's just like there's just a ton of information coming at you in a pretty short amount of time that you're trying to just swallow down as fast as possible to be in a position to make decisions and do the right thing for the business. I think the thing that I didn't appreciate about the private to public transition was, in a private company, you know all your shareholders, and you have a long history of working with them. They know you, they know your integrity, they know your character. They've seen you operate. They see you in a boardroom. They know how you tackle problems. They have trust in you that's built over years of operating together. And then in the public market, you have a whole bunch of public equity investors. They don't know you at all. And they don't trust you. They have a feel for you, like a gut instinct kind of feel for you. But the minute a number doesn't align to that gut feel, they just don't have any foundation to trust you the way that your private company investors do. And so I think that was probably the biggest step change in moving from private to public company, is that all of a sudden you have investors who don't really know you, don't have that operating history with you, and as a result, don't have that same level of trust that your private company investors, shareholders, board members have in you. And building that is really hard because you're talking to your investors after a quarter, or you're seeing them after a conference for 30 minutes. It's not the same level of interaction that builds that trust that you get in a private company.
Yeah, years of trust, years of seeing the results, and then switching kind of that quarterly mentality. So one of the things that's really interesting about your tenure as CEO is how long you've led the company, 17 years now. And I think part of that must be this reinvention mindset. I heard you tell this story that you read a memo to your exec team as the new guy hired to clean up the old CEO's mess. What's the core of that philosophy? How do you reinvent the company every year?
Yeah, look, I think I often think about, all I'm ever thinking about is what's wrong with ZoomInfo and what we need to do to make it not wrong in the future. And at any given moment, it could be a number of things, right? It could be international data at one point. It could be platform stabilization at one point. It could be an integrated experience or a not easy user interface. It could be our SMB segment or our enterprise segment not growing fast enough. And so there are all these things where constantly what's going through my mind is where is the business not optimized, not doing great? And which one of those causes the most issue for our company in the short, medium, and long term? And then I realized just at one point, why is it just sitting in my head and coming out in random interactions that I'm having with other people around the team? And wouldn't it be better if I just was able to tell everybody, these are the things that I'm most concerned about. These are the areas that I'm most worried about for the short, medium, and long term. And then it's a lot easier for them to take that feedback when it comes from a new CEO who just came in. And so I write this memo as the new CEO just came in. Hey, like, thank God you hired me because that last guy messed up all of these things. But don't worry, I'm going to go fix all of these things over the next 3, 6, and 12 months. And here's where they all are. And in HR, here are the areas. And in engineering, here are the areas. And product, here are the areas. And then I lay that out, and then everybody knows what I think is important. I think like my lens is a valuable lens because why do I feel that way, right? Why do I feel that way about HR or product or engineering? It's not because I just woke up in the morning and decided I didn't think that the way that we onboarded our new executive hires was bad. Like, I didn't just like make that up. It's that like I've had conversations with employees, I've had conversations with customers, I've had conversations with investors, I've had conversations with my executive team. So all of that input has like now given me a perspective about something that's unique because not everybody gets that same input at ZoomInfo. I have a unique place where I'm pulling in input from employees, customers, investors, board members. And so if I can take what the input that I'm getting and how it's making me feel about different parts of the business and then share that more broadly, I think it forces people to take a critical look at those areas and figure out how to improve them. And the best executives read those areas and go like, okay, I understand where he's coming from here. Let me see how I can improve that over the next 60 and 90 days. Most of the time, our people are super capable of solving problems solving any problem if they invest the right amount of time and focus into those problems. And so that memo is really designed to say, I don't think you're focusing on these areas enough. These are important areas that are bubbling up as issues. And I think they deserve more focus from you. It's not like I don't think HR leader can fix onboarding of new executives at the company. Of course he can. But what I'm telling you is I've heard this enough that I need you to focus here and solve this because it feels more acute than just something small.
That was a big aha moment for me as I progressed from like manager to director and VP was like all the best executives, they're not talking as much about solutions. They spent like 60, 70% of their time talking about what are the problems, which ones should we prioritize? And this seems like a really good exercise for you to be able to tell everyone, these are what our top priority problems are in each area.
I'm excited to chat with Andrew Liu, the founder of One Schema. Hey, Andrew.
Yes, thank you for having me on, Akash.
So One Schema recently made an appearance in the newsletter. At that time, I got to know that you work with some pretty amazing customers like Ramp, Vanta, Scale, and Watershed. What's the latest with One Schema? What are you really proud of having shipped recently?
Yeah, so we just launched One Schema File Feeds, which allows you to build an integration with any system in 15 minutes, just by recording yourself cleaning a spreadsheet file. We see our customers all the time getting stuck with hacks and workarounds, and the product teams that we work with don't have to turn down prospects because their systems are too hard to integrate with. We enable our customers to offer thousands of integrations without involving their engineering team at all.
That sounds great. What's the meme? The world is built on spreadsheets? I feel like these integrations as a PM would allow me to know that I could buy a solution that can handle the edge cases, that can handle all of the weirdness in the data instead of having yet another feature to maintain.
Absolutely, Akash. I mean, we've heard so many horror stories of multi-day outages from even just a handful of bad records. We're laser focused on integration reliability to help teams end all of those distractions that come up with integrations. We have a built-in validation layer, and it stops any bad data from entering your system, and One Schema will notify your team immediately if any data looks incorrect.
So as all you listening know, importing incorrect data can cause headaches for you and your customers. If you want to solve that problem, think of One Schema, and you can find them at oneschema.co.
Yeah, I mean, I say a lot of times in a conversation, I don't know how to fix this. Like, I'm not here to tell you how to fix it. I don't know how to fix it. But I'm here to tell you, I think it's a real problem that if you guys need to go and spend some time figuring out how to fix, I'm happy to give you my input on it, but I don't have a solution to it. I recognize it's hard. If I had it, if we could fix it easily, we could fix it. We would have already fixed it. That is actually another thing that I think that happens when companies get bigger, is that they shy away from solving the hard problems. And then all they do is the easy marginal stuff because they know they'll be successful at it. It's easy and marginal to do. And so we spent a year at ZoomInfo just doing these easy little tweaks all over the place. And people were really happy and proud of themselves because they did 100 little easy tweaks around the business. And I had to reignite the company in a way to say, like, listen, all we're doing is the easy stuff. We're doing nothing valuable, nothing differentiated, because every company is going to be able to do all of that easy stuff. That's why it's easy. Like, we actually build long-term enduring value here when we solve something that's really hard and really complicated. And it takes multiple people and cross-departmental collaboration to unlock and fix something. That creates enduring value in a business, not just like little tweaks that are easy that anybody can do.
100%. So what's been the story of ZoomInfo since you've reached public markets? What has been the kind of performance story for you in your mind?
Yeah, look, so we went public 4 years ago. The business was $300-ish million in revenue. Today, it's $1.2 billion in revenue. So it was a really fast growth curve. We made a number of acquisitions and brought a bunch of really interesting businesses together. And if you kind of look, we went public in June of 2020, and kind of June of 2020 through 2023, the business was really on fire. And you saw this thing happen across software, particularly, where software businesses, venture-backed, private equity-backed software businesses were a major engine of growth for ZoomInfo. And at the end of, in the end of 22 and into 23, you saw this big fundamental shift in the way these businesses thought about the unit economics of their business, where historically, at least for like 10 years leading up to 2023, these businesses were designed to grow and, or grow at all costs. And maybe it wasn't grow at all costs, but it was pretty darn close to grow at all costs. And in 2023, there was this like on a dime shift from grow at all costs to figure out how to grow slower and do it profitably. And so the number of conversations I sat in with our clients where they said, listen, we're a $50 million business. We're growing 80% year over year. And we were losing $50 million a year to do that. And our investors came in and said, listen, we don't want a $50 million business growing 80% year over year, burning $50 million a year anymore. We want a $50 million business growing 15 to 20% a year with 20% EBITDA margins. And we want it in a quarter or 2 quarters. And you're going to have to go figure out how to do that. And so the number one place that got cut the first place that got cut was sales, because the traditional sales model was add more salespeople, get more sales. And so efficiency inside of the go-to-market organizations of companies was being slammed. And you would show up like in 2021 and you'd have a new sales tool that you could drive a little bit of growth with, and everybody would buy any new sales tool you showed up with that could buy some incremental growth. And then all of a sudden, hundreds, thousands of companies were being forced to reevaluate the unit economics of their business. They laid off salespeople, they cut down on sales tool spend, and the front office, particularly around the sales tech stack, came under an increasing amount of scrutiny. Now, it wasn't just software companies, right? It was all companies. And so like you saw that same level of scrutiny happen in the enterprise, in non-tech, and the SMB in non-tech, but you really saw it in like mid-market tech more than anywhere else. And so that became a meaningful headwind for growth in our business. And then the space got a little bit noisy too. So you had ABM players that were becoming contact data players. You had, we were in conversation intelligence and sales automation, and it all kind of got noisy. You didn't know what did what. And companies were like, listen, I just need to rationalize my spend on my sales tech stack. I met a company a couple of weeks ago. We have 42 tools for our sellers to use. Like, how's a seller going to use 42 tools? Doesn't make any sense. And so there was this desire to like consolidate, while at the same time, there was this pressure on the go-to-market organization that was also shrinking. And so we were up against that. We've been up against that for like 2 years now. And then, look, last quarter, as we've gone through this, was the first quarter where we saw, since the end of 22, where we saw growth in our 100K cohort again. Our enterprise and mid-market companies, our net retention stabilized and improved. Our $1 million cohort started growing again. On new business, we've moved the business up market, and we're doing much more PLG in the down market. And so I think the fundamental dynamics of the business shifted, and we shifted with them. And so today, we're in a much better place to start reaccelerating growth for the business again, as we've kind of gone through this cycle of like up and then down, and then now we're in a great place to start reaccelerating the business going forward again.
So that's where I want to turn to now, is like breaking down the ZoomInfo model as it exists today. So first, I just want to kind of complete some check boxes. Obviously, you have a lot of sales tech products under your belt. You also don't just sell to sales teams anymore. You sell to marketing teams, you sell to talent teams. And then within that, you have so many segments we already talked about, like enterprise, SMB, tech, non-tech, and then you have your sales-led and your product-led motion. Can you kind of give everybody a picture of like, what are the like focus areas, and how have you structured your business around these now so many numbers of products, buyers, and target segments?
Sure. So look, I think at the core, the foundational asset is a B2B data asset that provides high quality data on companies and the decision makers who work at those companies and how to get a hold of them. In the company data asset, you can think of that as like regular firmographic data. So size, industry, growth rate, then technographic data. What does their tech stack look like? And then we've surrounded that with a tremendous amount of signal data, like B2B intent data. Is the company researching a specific product or service out in the market? We've brought in earnings call data. So is a company talking about something unique on an earnings call? Podcast data. If I say something on this podcast that's interesting to a cybersecurity company, we're going to capture the transcript of that and then tell a cybersecurity company that the CEO of ZoomInfo was on a podcast talking about how important cybersecurity was. Job posting data. What job post is somebody posting on their website, and how does that trend look historically? So you've got this like core of company data, this core of contact and people data, and then we're building applications essentially on top of it for go-to-market professionals, sales professionals, marketing professionals, and then talent professionals. We think about the market like that. We have enterprise customers and mid-market and SMB customers across all three of those areas: talent, marketing, and sales. Our biggest business today is sales, is our sales business, where we sell access to our platform, which is extensible into CRM systems, enrichment and cleansing of CRM data, signals that are prioritized for your business. That's our largest segment. Then marketing and talent are sort of like two other segments. The business on the customer side is broken out by size. So we have an SMB segment, a mid-market segment, and an enterprise segment. As you get into the enterprise segment, we start verticalizing. And so you'll have a financial services vertical, a tech vertical, a telecom vertical within the enterprise, so that the account manager you're dealing with has some familiarity with other accounts like yours. And then the way the business grows is we tend to land in a smaller way. And so like we have about 1,800-ish customers spending $100,000 a year with us. Many of them are spending $1 million a year with us. all of those customers tend to start in the call it 25 to 50K range upfront. And then we grow with them over time. And you can grow by expanding seats. You can grow by expanding products. And so you might come in and buy the sales product for 20 people in your storage division. And then you grow from there to your cybersecurity division, to your consulting division, to your talent team for recruiting. And so we're growing seats that way and product that way. And so we're growing product and seats within the customer base. And then most recently, we released our Copilot AI product, which we're monetizing in our customer base as people move from sort of the legacy ZoomInfo sales platform to the Copilot AI platform.
Okay, got it. And then people like to put companies in boxes. I don't think you can quite put ZoomInfo in a box now with how many different products and motions you have. But is it fair to say your biggest motion still is your sales-led enterprise motion for sales teams?
Yeah, I would think about it as our sales-led motion for SDRs, account executives, account managers, closely followed by our marketing motion.
Okay, cool. So one of the areas that really matters in a business like this is activating your customers. After you sign the deal, if you really want them to renew for the second year and expand in your third and fourth and become lifetime ZoomInfo customers, you need to get that entire account actively using the whole platform and all the features that they're paying for. What are the key tactics and motions and learnings you guys have had in activation?
Yeah, look, first, it doesn't matter how many resources you throw at this. At the end of the day, it comes down to how simple your product is to use. So while I'm very proud of the onboarding motion and implementation and technical implementation motion we've built at ZoomInfo, you're constantly looking at what we have to do from an onboarding and implementation perspective and asking yourself, why can't that just be done inside of the product? Why is that just not simple enough for someone to come on, sign in, and be able to understand the nuances of the product? And every place where you're doing investigation there, you're figuring out ways to make the product more usable, more easy to understand, less nuanced than if it required somebody to sit there and handhold you through the process. This is kind of how I feel around customer success too. You have a bunch of customer success managers and they're kind of filling in holes that the product made complicated. And so number one, I think onboarding, implementation, customer success, the first question you have to be asking yourself is, how am I building what they're doing into the product roadmap so the product can handle these things in the future? And then we're going to keep building product and things are going to get more and more sophisticated and harder to do. And so you're going to start again with the technical implementation manager taking you through those things and then figuring out how to use the product. Today, when someone signs up with ZoomInfo, they go into an onboarding motion where a customer onboarding manager walks them through, helps them get the account set up, helps them get the account configured, does a training for all of their users, it integrates their CRM system, maps the fields, integrates their target accounts, sets up Copilot for them, get a full training, and then they're off to the races and they can come back and ask questions. They'll have an account manager, a customer success manager who can answer questions for them. But that onboarding motion is really focused on getting our customers to take a couple of really specific actions in the product that we know if they start taking, they'll continue to take and they'll be a top user of the product. And so you have an analytics team that helps you understand, hey, here are the activities that if a customer takes within their first 2 weeks of getting access to the product, they'll continue to take and be a really healthy customer. And if they're not taking, we're implementing a go back with the customer success manager or technical implementation manager to make sure that they're taking those actions. And so onboarding implementation is a super important part. Like you said, Akash, we have to get them using the product because if you don't, they don't become healthy customers and it gets harder and harder. At month 7, they haven't used the product the way that they expected to, the way you expected them to. It's really hard to pull them in again. And so onboarding is your opportunity to get that right.
As someone who's led a lot of product activation teams, that's music to my ears. So the other team that often exists in that area is expansion. And I'm curious, what are the main levers and learnings you guys have had to drive expansion?
Yeah, look, I think that there are a couple of things. One, customers buy at ZoomInfo a certain number of credits. And those credits are usable for downloads, for exports, for cleansing of their CRM data. And so we're tracking the usage of those credits. And then we're looking at opportunities to come in and say, hey, look, you're way ahead of your credit usage. Let's talk about a more expansion as it relates to credits and cleansing of your CRM. You must have a project that you're doing right now that we can get plugged into and make more seamless and easier for you to use. With Copilot, one of the most exciting things for us today is Copilot expands the user personas that we sell to and who can use ZoomInfo, where historically it's been SDRs and AEs. With Copilot, you really do expand account managers, customer success managers, RevOps professionals. And so you can expand use cases and therefore seats that way. And then consumption across both those credits that we talked about before, but also consumption around the AI-driven processes in Copilot. You can drive consumption that way as well. So between consumption and user seats, those are the two levers that we're using to grow within the customer base. And then there are also the additional products. And so we have Chorus, which is a conversation intelligence product. We have our marketing product. You may land in sales and expand to marketing. You may land in marketing and expand to sales. You may land in talent and expand to marketing and sales. In the enterprise, you're super benefited by the fact that when you sign an enterprise customer, you've gone through security and privacy and compliance and governance review. And so once you've gone through that, it's a lot easier to expand within that customer because then they really don't want to deal with the next vendor having to go through all of those steps. And so you're in a really good partnership position to expand within your existing customers, particularly in the enterprise, if you're a leader as it relates to privacy and security and compliance.
So we talked about credits, seats, and products. And how much of this do you drive via the sales org versus the product? How much have you been building like expansion into your product, and what has been successful on the product side?
Yeah, great question. About 2 years ago, we introduced a store within ZoomInfo. And so if I'm a customer who just wants to add 10 more seats, I can just do that directly within the product. If I just want to add credits, I could do that directly inside of the product. There are a bunch of places in the product where you can click a button and a sales rep will follow up with you. And then there are a bunch of analytics that come from the product and then get in front of a sales rep when key moments are happening within a customer within the product. And so positive and negative. And the negative one might look like, hey, their usage dropped precipitously over the last 2 months. Here's a play you need to run. A positive one might be that they're running out of credits and there's a good opportunity for a credit upsell, or that marketing titled users have been using the sales product. Great opportunity to show up and show them the marketing product. And so we're leveraging data from the product to drive a sales-led motion. And then we've also made it easy in the product to do the basics of expansion, seats and credits.
All right. And then I want to shift to pricing and packaging. So you actually started with kind of what's considered best in class in SaaS these days, which is like the hybrid seats plus credits, which is kind of known as like usage-based pricing these days. From my external eye, it seems like one of the newer things that's really come in has been a huge expansion of your product-led growth motion, a lot more focus on free users and free to paid conversion. Is that fair? And what have been the other big evolutions in your pricing and packaging?
Yeah, there's a real free user and free to paid conversion motion at ZoomInfo, where our website gets millions and millions of visitors every month, and so we're converting now. We're converting many of those users to free trial users, and then converting those free trial users to paid 1-seat users of the platform. We also own assets like NeverBounce, which is an email deliverability platform. NeverBounce is all product-led. There's no salespeople on NeverBounce. It's all a product-led motion where someone can come in buy a certain number of credits, cleanse their emails. And so that little part of our business is all product led. And then the rest is like, there's a product led motion of sales OS. And then there's like a product enabled motion where we're also using the free trial users who haven't converted to feed information to a seller to follow up with them on a sales led motion as well. I think those are the big evolutions of the company. Historically, there was no product led at ZoomInfo. And today, now that product led, fully digital self-service motion is a meaningful part of the business.
And your competitors, they're really coming in on the product-led side, the SMB side, Apollo, where I worked, Rocket Reach, Hunter, Lucia, the list goes on and on. Are you thinking about like a version of future with a big freemium plan for ZoomInfo?
For sure. Yeah, for sure. I think there's a real opportunity for a freemium motion at ZoomInfo, particularly in the down market. I think it's pretty hard to buy this in the super enterprise when you have a whole bunch of security and privacy protocols, unless someone's going rogue, which is, fine, but doesn't help you build a real business in the enterprise. But in the SMB, I think there's a real opportunity to have a freemium led motion where customers come in, they're able to put a credit card in, buy month to month. And we've already had some success there and think it's a big lever for growth in 2025 as well, but particularly around resource allocation. You can run a much more efficient business if you can drive digital self-service in the down market, and you can put those resources into the enterprise.
Awesome. So now I want to shift focus into how ZoomInfo builds product. Obviously, you're the CEO, but you would plug into all the important launches. And your recent big launch, which we've talked a little bit about, is ZoomInfo Copilot. Can you take us behind the scenes of the product development process and how specifically you were involved from idea to prioritization and execution?
Yeah, I'm pretty involved in the product. Mainly today, I'm mostly involved directly with our chief product officer and our senior VPs of product, our head of AI, where I'm getting really well aligned on the strategic vision of where we're going. And then coming in to see what are the elements of that strategic vision that are going to get implemented over the next quarter, over the next year, over the next 2 years. Copilot specifically, we started talking about a year and a half ago. Originally, it was called Signal to Action. And we had this concept that we had generated a bunch of this really interesting signal, and we wanted to use AI to rank that signal and then make it really easy for our customers to take action against those signals. And so if you go back, I went back the other day, one of my posts on LinkedIn about a year and a half ago was a pure mock-up of what we thought Copilot, which at the time we called Signal to Action, would look like. And we basically said, hey, generative AI is coming. This is what the ZoomInfo platform is going to look like with generative AI in the future. And I took a bunch of flack from my internal team when we put that out, because they were like, it's not this. This is not what ZoomInfo is. We're not working on this. This vision is too big. It's too bold. How are you going to get us from here to there? This is a ridiculous thing to put out there. And I remember that. I went and watched the video last week, and it's like a bad version of our current deployment of Copilots. And it just kind of goes to show you that you really do have to be bold with the vision that you put out there. And then you have great people, and I have a great chief product officer. You have great people, and I have a great chief technology officer. They're able to take that vision and then start bringing it to life, do all of that work underneath to make that vision a reality. And sometimes you are actually starting with real foundational work. Like with Copilot, we needed a robust data store that brings in customers' data from CRM, marketing automation, marries it with ZoomInfo data, consolidates that together, normalizes it, cleanses it, gives you essentially a virtual CRM that then you can start building prioritization and AI actions on top of. If I try to just go to your CRM and do that, it'll never work because the CRM data, it's not complete, it's not accurate. And if I try to do it just with ZoomInfo data, I don't have any context for the CRM, which tells me who your target accounts are, who your customers are, who your prospects are, who's closed won, who's closed lost. And so unless I'm able to bring those two together in a foundational data asset, and then I can build on top of, I don't really have a product. And historically, ZoomInfo's been over here, your customer data's been over here. And so the first thing we had to do when you laid out that vision is our chief technology officer, chief product officer had to get together and say, hey, we need a foundational data store that matches our customer data with our data and builds the virtual CRM. We're going to build all of this activity on top. And so I get involved at the strategic level, but then also on the resource allocation or prioritization, which is basically like, hey, Henry, we have these three things. I think this should come first, this should come second, this should come third. Do you think differently about that? And today, I'm constantly balancing two things. One, how much value are our customers getting out of a new product or our product specifically? And so with Copilot, I'm going, where are we on displaying a signal to a customer, telling a customer, this is the account you should focus on, and the customer actually taking an action against that signal? And how much are we investing behind getting more and more customers to take more and more action more and more regularly against the signals that we're ranking for them and using the different elements of the Copilot product? And then second, what are we hearing on the go-to-market side that's making it hard for us to sell? Where are the go-to-market friction points that we're coming up against? And so, our sellers will tell us, look, my customers, they love Copilot, but they want to trial it in a small team before they go take it across all of their teams. And do we have the technical ability to do a 20-person pilot across a 100-person team, or do all 100 people have to get the pilot? Or the seller will tell me, hey, it's really great, but they really need the ability to bring their own signal. When are they going to be able to bring their own signal? Great. Let's go make sure that that's prioritized on the roadmap so that we're plowing through go-to-market friction, but balancing that with getting customers to really take advantage of the new features in the product.
Got it. And I've seen like a lot of really cool videos of you actually jumping in to like do the marketing for it and really push the feature forward. How did it like towards the execution and final stages? Did you get involved in design reviews and helping the team, like the product team actually understand these are the improvements I want to see?
Yeah, for sure. So I wake up in the morning and I usually have about an hour to do like whatever I want to do as it relates to work. And usually at least half of that time is spent poking around the product and finding areas that it should be improved, or the usability is not where it should be, or it's a little confusing to go from point A to point B. And so I'm constantly giving that feedback to the product teams. And it could be something as simple as like one of the modules in Copilot lets you ask questions about your account. And after you ask a question, for some reason, we removed the cursor from the text box. So you actually have to go click in again to ask the next question. And then why did we do that? Like, just leave the cursor in the box so I can type the next question. So it could be as simple as that. Or it could be something as complex as, hey, I see these accounts on my feed and they're ranked, but I have no idea why they're there. And we need to do a better job of explaining to a customer, like, this account is number one for you to reach out to because it's a perfect fit based on your ICP, because it had these three signals, because it had a new CTO change, because it had these job postings. These are the people you should contact. You should contact these people because they match the same title and buying group characteristics as these last 10 deals you sold. And how do you simplify that? But you need to be more detailed like that. So it tends to be really specific or broader, where it's like, go figure this out. I don't have the answer, but I know the thing that we have here is not good enough.
Okay. So from the perspective of a founder CEO who probably knows more about the product, the customers than anyone else in the company, what has really stood out for you in the best PMs and product leaders you've worked with?
So they come into a situation, they have a point of view, which, we're paying for some point of view. but they're willing to go out there and have that point of view challenged and molded and changed into the right thing for ZoomInfo. And they're essentially a conduit to the best product decisions at the company. And oftentimes you may have the right product idea, but it might be 2 years from now where we're going to be in a position to implement it because we just don't have the foundational technology for it. We haven't evolved the teams and the skill sets for that product. The customers don't even really they're trying to solve something much more simple today, but we can sort of graduate them and evolve them in the future. And so not only do you have to understand where the puck's going, what the customers want, but you also need to understand the state of the current product and engineering organization to know what the feasibility of implementing that in a timeline that matters is. And so they have to be tightly connected to their engineering counterpart, their go-to-market counterpart, and the customer. And the right product decisions have to take into consideration all three of those counterparts. And the best product managers spend a lot of time with those three constituencies and are open-minded about their feedback.
So the last area within product I want to double click on is you guys chose to buy your conversational intelligence tool. You mentioned Chorus.ai. It was already a pretty successful company in the market versus build it. How did you make that decision? Because a lot of people are facing similar decisions, and it'd be really insightful to hear how you guys made that.
Yeah, look, at the time we made the acquisition, there were kind of just two players in the market for conversation intelligence. And if we went out and started building the solution on the day we were presented with the opportunity to buy the solution, it would have taken us a pretty significant amount of time to put a real good product in market. And so some of it is timing. And we knew some of it is timing, and some of it is, I knew that if we had Chorus, that the people that we're selling ZoomInfo to were the exact same people who would be buying Chorus. And so we had this great distribution engine for a completed product to take out to market immediately. And all of our sellers were using Chorus, so they knew how it worked. They knew how to articulate the value. So on day one, you could turn on 1,000 sellers to bring that to market. And so you're making a go-to-market decision, but also at the time of the Chorus acquisition, for you to build a really great transcription engine that's designed for go-to-market, you needed thousands of go-to-market conversations to build a really strong transcription engine for go-to-market use cases, which meant that even if we had the best product in market that day from a user perspective, from a recording perspective, there would be a lag before we had a great product that could transcribe a buyer's conversation or a customer's conversation for another real period of time, because we needed those recordings to learn from and put our machine learning against. And so it was we could go build a product, it'll take us a while. Then we need the recordings to make the product actually work and be smarter to train against. And so that's going to put us behind more. And we have this sales team that can take this to market in an accretive way right now, and we can launch it tomorrow. And we really do believe, we believe then, we believe today, that unstructured data, that conversations that you're having with your customers is a key unlock to any AI you're building in the future for go-to-market use cases. The insights and data that come from your customer conversations, that unstructured data is incredibly valuable to build AI triggers, account plans, medic plans. All of that go-to-market work can sit on top of that unstructured data. And we feel like we have this incredible unstructured data engine now with Chorus that can help us really deliver go-to-market AI for our customers in the future.
Got it. So the timing seems like a really, really important element there. Now I want to shift over to your personal life and just I've heard and I've seen on this call also that your energy is unmatched. How do you manage your energy running a public company, still taking care of your family? You have a daughter and yourself.
Um, I have a routine that I try to stick to. Every morning I have like a pretty standard routine that I go through that involves exercise. Like now I'll be a caricature of a public company's tech CEO, but it's exercise and a cold plunge and a little bit of meditation that I do every morning, basically no matter what. And then I take my daughter to school. She goes to school 10 minutes away on a 10-minute walk. So I walk her to school every morning and I have like another kind of 30, 45 minutes with her every morning. And I just stick to that routine every single day. I think that helps me maintain my levels of energy each day. I think without that, it would be very hard to get through my days with this level of energy.
And being a public company CEO, it sounds at least like a 7-day a week, 16-hour-a-day type of job.
Yes, and it is. It is a everyday job. There's always something to deal with. You have to be really good about turning off when you have to turn off. East Coast is a lot harder than West Coast. When I relocated permanently to the East Coast, one of the things that I noticed was on the West Coast, when you go home at 6:30, nobody's bothering you anymore. But on the East Coast, 6:30 is 3:30 on the West Coast, and 6:30 to 9:30 are probably your most valuable family hours, and they're getting interrupted. And so you have to figure out how to manage those 3 hours. Those are the 3 most important hours of your day. And you have to figure out how to focus on your family, my wife, my daughter during those 3 hours, and I can get back on later after that. But you don't have that problem on the West Coast. You do have it on the East Coast.
And I think the public markets can be a pretty tough weighing mechanism. How have you personally handled dealing with that like daily read on your performance?
Yeah, look, first, I try not to look at the stock price. I look at it at the end of the day to make sure like something weird didn't happen. I don't look at it like constantly during the day. It doesn't do you any good. And I try to encourage our team to take a longer term approach to the stock price. And look, I know that what I'm doing every day is trying to build a long-term durable company. And I want to make the right decisions to build a long-term durable company. And I know if you look across any company that exists, there are ups and there are downs, but it's really hard to beat somebody who never quits. And we're going to come in every day, make better decisions than we made yesterday, build better product for our customers than we did yesterday, optimize our go-to-market motion, and consistently get 1% better every single day. And we're going to build a long-term durable business here at ZoomInfo. And I think where I sit today, the opportunity around leveraging AI for go-to-market use cases is probably the most exciting opportunity that's been in front of this business ever. And I feel like we have this really unique position to build really great products for our customers around leveraging our data, their data, and AI to build really interesting go-to-market products, where the pace of change over the last 15 years has been basically the same as the pace of change over the last 2 years, and it's only getting faster. And it's a pretty fun place to be today.
Yeah, I think both PMs and sales professionals can feel that, how things are like accelerating. The way we're doing work is changing faster than ever. And when you have a tool like ZoomInfo, which is, a salesperson's home base for doing the stuff, it's really important to innovate there. Now I want to shift over to the lightning round, which is just kind of a grab bag of questions we ask everybody. And I want to start with, what's your favorite book? We see a bunch of books behind you, so just one with lessons for product and growth people.
I think I would go with the Walter Isaacson biography on Steve Jobs.
Okay. That was a classic. I'm currently working through the Elon one. Are you reading that?
Also a good one. I read that one. Yeah, it's the Elon one is also great. The Elon one is also great. The Steve Jobs one, opens the door, makes you believe that no matter how maniacal you think you are about building a great product, you should continue to be that level of maniacal, if not more, because building a really great product is really hard to do. And it takes iteration after iteration after iteration. And it changes your mindset when you learn about the way that he did it.
Yeah, it was really the pinnacle of craftsmanship. What's a newsletter, if you have one, that you anticipate hitting your inbox?
Product growth newsletter.
Oh, you're too kind.
That you're sending out every day. I read this every week. I read this newsletter from a guy named Michael Levy, which kind of covers our sales tech space. Comes out on Sunday afternoons. It has the ability to ruin your Sunday afternoon if you learn something that you need to go respond to immediately, or you're going to get a bunch of questions about. So that's part of the reason that you anticipate in your inbox. But it also gives you a good read on the market.
Okay. And more than 17 years of building products at ZoomInfo, I'm sure more than one of them have flopped. What's a particularly memorable product failure that you learned from?
The biggest, and it's not necessarily a failure, but it doesn't, but it's the same concept. I redesigned the first time I did a full redesign of our product, the front end, all of the workflow in the product. I did this whole new thing. The new design, the new workflow, the new way we laid out the data was objectively way better than the old version. And I was so excited to get it out to our customers. And I remember the morning we flipped the switch, our customers got it. And all I took for the next 48 hours were angry phone calls from customer after customer after customer. Why did you do that? This is way, way worse. This is like a much worse platform. I can't believe you made these changes. And after 48 hours of that, somebody came to me and was like, there's no easier product to use than the one you've already learned how to use. And you just changed that whole thing for these guys. And of course, they're going to be upset about it. And I relived that over time. You move something a little bit to the right or a little bit to the left, and you can really upset some people. You just have to have a lot of conviction and do a lot of testing that makes you really confident that it's better for the broader customer base. And then you have to be dead fast in that conviction.
I think every product builder would empathize a lot with that story. All right, where can people find you online and how can they help you?
They can find me on LinkedIn. They can find me on X. I'm Henry L. Schuck, or just Henry Schuck on LinkedIn. You can send me an email. It's just henry.schuck@zoominfo.com. If you have good feedback about ZoomInfo, something you'd like to see, something that an account manager or CSM did well for you, something you wish they did well for you, I'd love to hear that feedback.
All right, Henry, thank you so much for being here.
Of course, thank you for having me, Akash.
Thank you so much for listening. If you found this valuable, you can subscribe to the show on Apple Podcasts, Spotify, or your favorite podcast app. Also, please consider giving us a rating or leaving a review, as that really helps other listeners find out about the podcast. You can find all the past episodes or learn more about the show at product-growth.com. See you in the next episode.